On News Asia.
Well, it's always never easy to please a customer, especially in the insurance industry. But Singapore-based insurer Great Eastern Holdings scored well in a recent customer satisfaction survey. Yet the company isn't resting on its laurels. Well, earlier today, Channel News Asia's Yvonne Chan spoke to Group CEO Chris Wei. And she started by asking him what challenges the company is facing when trying to expand in mature and saturated markets.
There is no easy market, whether it's a mature market or whether it's an emerging market. And it really depends on how you define that. Singapore, what we appreciate, and we're turning 105 this year, because we have that history and because we're so established in the marketplace, we enjoy a strong brand presence. In the case of emerging markets, we don't enjoy the same scale. We don't enjoy the same brand dominance. So as a result, we're focused on a very clear strategy on what specific market segments we want to go after. There are a lot of Indonesian customers and Vietnamese customers that do see Singapore as an aspirational destination, whether it's for education, healthcare, or financial planning.
Could we be on the lookout for Great Eastern venturing into newer markets for 2013 or 2014?
Certainly, I think some of the markets in the region that offer good long-term future potential, such as Myanmar, we are definitely assessing. But there's no rush. There's no sort of definitive timetable where we must be in by a certain date. We'll be practical, and first and foremost, we will focus on our 6 markets that we are in right now, which is Singapore, Malaysia, Indonesia, Vietnam, Brunei, and China.
Moving to the broader industry, what are some of the challenges facing Singapore's insurers? And then coming down to a little bit more detail, how are you guys going to attempt to mitigate some of these challenges?
Probably one of the most talked about challenges is the low interest rate environment. And insurance companies do buy long duration fixed income assets to back their future liabilities. So in an extended period where interest rates are low, that is a challenge. And we need to look, I think, more creatively at different types of asset classes in order to enhance yield, but also be very responsible in maintaining a very solid and secure asset portfolio.
MAS recently did present their recommendations on the Financial Advisory Industry Review Panel report. The recommendation calls for a web aggregator that allows consumers to make easier comparisons online about what's available from different insurers. Now, if this was implemented, do you think this might affect GE's profits, especially when customers might be able to switch to cheaper alternatives?
In terms of a web aggregator, I think it's a good thing. It helps customers understand their options. Where we have fed back to the MAS is to do it in such a way that it doesn't make price the only consideration. It is one consideration, and it is an important consideration for consumers. But in addition to that, it is how good the insurance company is in terms of customer service, financial strength, their claims paying track record.
What were some of the key growth drivers for Great Eastern in 2012? And was this in line with your expectations and also in line with some of the trends in the industry?
Generally, higher awareness of Singaporeans about the need to save for retirement, but the need to save for long-term care as either themselves or their parents get older. That's all driving towards a more active industry and a growing industry, which is great for us. But even in Southeast Asia, there's so much interest by foreign investors because you've got growing average household wealth, and they're all beginning to get more sophisticated in their household financial planning. So yeah, I'm very bullish about the industry.
And that was Chris Wei, Group CEO of Great Eastern Holdings. Well, this has been Business Singapore. Thanks for watching and have a good night.